Okay, in this video, I'm going to show you how to convert LIFO basis to FIFO. And this is only relevant for companies that use the LIFO method to account for their inventory. They've got some extra disclosures, and I want to show you how to use those disclosures. So let's take a look. First of all, the regulation that we're talking about here is Regulation SX. SX tells a company what they must put in their financial statements. So previously, we've talked about Regulation SK, which tells you what you need to put in your 10K. The financial statements are just an element of a 10K. And so this information actually needs to go either in the financial statements or footnotes. And that's why it's in Regulation SX. And so here's what this rule says. If the LIFO inventory method is used, the excess of replacement or current cost over stated LIFO shall, if material, be stated parenthetically or in a note to the financial statements. So here they're talking about the requirement to disclose something called the LIFO reserve. And LIFO reserve tells you the difference between LIFO and FIFO. And so when they're referring to replacement or current cost, they're actually referring to FIFO. And let me show you what I mean. So imagine you're a company that sells basketballs, okay, and you sell them out of a bucket, okay? So you go into Dick's Sporting Goods and they have a bucket of basketballs. So when Dick's Sporting Goods buys the basketballs, the ones that they buy first go on the bottom of the bucket. And so Dick's Sporting Goods is buying basketballs here, okay? I think they have them buying 5 basketballs. And they buy these basketballs at different times, okay? So they bought these top of the bucket basketballs more recently than the bottom. So the cost of the top basketballs reflect the current cost to buy a basketball. The bottom basketballs reflect the historical costs to buy a basketball. And you can see that they want the difference between LIFO and replacement or current cost. Well, you can see that this is FIFO, right? Because these first ones in, if I want my ending inventory to reflect current costs, the first ones I need to sell are the first ones I bought, because I need to remove those historical cost basketballs. So let's do that. So I'm going to remove these historical cost basketballs, and now what I have left in ending inventory reflects the current cost to buy a basketball. So that was first in, first out, FIFO, and you can see what's left in ending inventory is the current costs. That's why when Regulation SX says you need to reconcile LIFO to replacement or current cost, what they mean is you need to reconcile LIFO to FIFO. And so now let's look at an example company that does just that. And the company we're going to look at is Sherwin-Williams, which is a paint company. So the inventory we're talking about in general is paint. And let's take a look at their information. So the first thing I'm going to show you is the extra disclosure that Sherwin-Williams gives because they use the LIFO method. So Sherwin-Williams uses LIFO, last in, first out. But since they do that, they're required to reconcile to FIFO by giving investors the LIFO reserve. Okay, so this is the LIFO reserve. Let's see what. Okay, LIFO reserve. And at the end of 2019, the LIFO reserve is 339.8. At the end of 2018, it was 377.1. Okay, now you need to know these equations. So to reconcile LIFO inventory to FIFO inventory, what you do is you take LIFO inventory and you add the LIFO reserve. And when you do that, you end up with FIFO-based inventory. And so we go to the balance sheet. So I've pasted in here is the balance sheet. And it's the asset section there, and you can see they have inventories of 1889.6. So that is based on LIFO, okay? They use LIFO. Sherwin-Williams uses LIFO, at least for a portion of that inventory. And so that 1889.6 is the LIFO inventory. The LIFO reserve is disclosed in that footnote. It's 339.8. And so inventory on the strict FIFO basis is going to be 2229.4. That's how you convert LIFO to FIFO, is by using the LIFO reserve that they disclose in the footnote. Finally, we'll calculate what would cost of goods sold had been if they just used FIFO to cost their inventories. And so we'll need the income statement here. Let me erase these markings. And the equation is take your LIFO-based cost of goods sold and subtract the change. So this delta here is the change in the LIFO reserve, and that's how you get FIFO, cost of goods sold. So LIFO, cost of goods sold, is right on the income statement, right? They use LIFO, and so that's the basis that's represented on the income statement. And by the way, they use at least a part of LIFO. At least some of that cost of goods sold is based on LIFO. And we'll use the change in the reserve from last year to this year. So you can see the reserve decreased from last year to this year. We're going to subtract that decrease. So we're actually going to be adding that the difference there. So we'll take LIFO-based cost of goods sold of 9864.7, which is on the income statement, and we'll subtract the change in the LIFO reserve. So this is 2019 minus 2018. That's the change in the reserve, and we're going to subtract that change there. And when we do that math, we end up with 9902. So that's what cost of goods sold would have said on the income statement if the company had used FIFO for all of their inventory. And that's how you convert LIFO to FIFO using the extra disclosure of the LIFO reserve.